Welcome back to Talking Technicals. So we love to hear from all of you, and there have been many questions about the kind of software packages that you can use to do technical analysis. Some are free, some of course cost money. Nothing comes easy in this world, and free most importantly. But which are the good, relevant software that would work for you? Let's get some tips on that, Doc. Which ones would you pick?
Well, let me talk about the free one first. You have something called ChartNexus, which has a website by that same name. They have a free version which also picks up data from NSE, or they also supply you the data. So I think that's one of the things that all the beginners could use. The other thing for beginners would be Metastock, which is like a global, let's say a global standard in terms of entry-level software. It's very good. It's fairly priced, so you could actually go in for maybe Metastock. The third one, which is a little bit for advanced set of users, it's called AdvancedGet. GET stands for the Gann Elliott Trader. AdvancedGet is a lot more expensive. It has got a lot of built-in analytics, so you need to be a bit of a professional user. And the fourth one is called ASA, which actually stands for Advanced Stocks Analysis. ASA is something I use personally, and I don't really like to take a view on a chart till I've seen it on ASA. So like that, everybody has their personal favorite. Somebody swears by Metastock, someone will swear by AdvancedGet. But these are four which are, fairly good, very robust, very, very useful, not very expensive. AdvancedGet, of course, is on the higher side, but the rest are affordable.
Okay. So take your pick there, and we'll hopefully hear a lot more from you all on technical analysis and all the chart quizzes that we give, which are going to come up in just a little bit. Right now, it's time to get you a trade setup. So we have been looking on this episode on markets that are doing well, on bull markets and market tops. How would you set up a trade in a market like this stock? You picked up levers as the stock. Yes,
I looked at levers as a good example of how to look at a strong stock, as a good, let's say, good pedigree stock, which has not been doing well, but the market has been doing well. The market made a low. I'm going to cut back a little in the earlier time on my chart here today. And when you look at it in February of the last year is when the market made a low. And at that point of time, and then subsequently it made a low again in May, right? When it made a low in May, the FMCG index was significantly higher, showing that the FMCG stocks as a whole or as a sector was the one which was being favored by the market. Now, Lever is a leader stock within FMCG, and at that point of time, it was putting in something which looked like a triple bottom. And if you look at the RSI which I've got on here, that is also showing me a divergence. And then it puts in a triple bottom and stages an upside breakout here. Soon as the FMCG index breaks out upward, the market index breaks out upward. So now we have all all of them in unison, the stock, the sector index, and the main index, all of them in unison going up. So I think that is where you should look to buy this. So this is how you actually tie it in. Take the strong stock in a strong sector, in a strong market. And then when they all tie in quickly, you will actually get a much bigger bang for the buck. And
it's contrary to popular belief that Levers is a stock which is very staid, is largely a dividend yielding stock, not so much for trading.
Stock, that's the thing.
Yeah, and yet that's the one that you picked here.
Yeah, because then it actually went from something like 260 to about 350, which in a stock like Lever in a market which is not so very strong is an exceedingly good return.
Good return to have. Well, time now to get to the trader profile of the week. It's time to get inside the mind of a trader, and here's what we picked for you.
This is Rajat Bose.
I was an academic doing my research for a PhD. That did not work out. I tried a couple of things, and after that a friend of mine suggested that since I was a researcher, why don't I try my hand at stock market research. My unflinching focus on risk control. I try to keep a strict stop loss, and I vary my position size. That is one thing that has helped me sustain as a trader, succeed as a trader, and in future to continue as a trader. In 1994, when the market topped out in September, after that I realized one thing, that in a bear market you can't be an investor. At best you can be a speculator, because I had to survive. All this while, although I was looking at charts, but I wasn't concentrating so much on them. But come 1995, I started concentrating much more on charts than on fundamentals. Not to get swayed away by the roller coaster nature of events or getting whipsawed by the emotions in your trading. So understanding cycles is the key to success in life, not just in trading. W.D. Gann, whom I consider as a legendary trader. His Truth of the Stock Tip, which you must read again and again. And secondly, his Tunnel Through the Air. When you come to the market to trade, do not come to trade your beliefs. Most of us, when we come in the morning to trade, we come with a notion that the international markets are down, so the stocks will go down, this thing. No, allow the market to tell you as to what you should do.
Coming up, last week we'd asked you to give us your analysis on the Nifty and on Rand Baxi. And Doc, which were the winners you picked?
Okay, thanks everyone for writing in. We have a lot of regular people writing in. Prashant Sarnaik, Zubin Zaveri, Anuradha Kumar. All of you sending in very good and very valid work. Please do keep up the good work, and thank you for the consistency in your response. The chart I have chosen for this week is from Mihir Thakur of Bombay, and I've chosen this, not because the analysis was very spot on, but I've chosen it to illustrate a particular point. What Mihir has done is use the let's say moving averages in a different way. He has converted it into an oscillator. See, just to recap, the moving average works on the principle of reversal towards the mean. And he has used this aspect to show how the market was already trading down to a level where there should be a reversal for the mean. He had also illustrated this along with some candlestick charts saying that lower shadows indicated some amount of buying pressure at lower levels. Everything is right? But the whole point is that we must always be ready for a plan B. Now the main thing is, Mihir, you had a plan for trading the market upward. That's fine, everything that you said was right, but then the market had other ideas. So you should also have a plan to trade when the market fails on the signals that it shows. And the market can keep doing this because when volatility increases, the range expands. When a trend sets up, the usual sets of tools that signal as a reversal will also, generally move towards failure. So we should have a plan B. And in this case, I think that was very much upon us. So the key thing is, I will leave you just with just one point. Failed bullish signals are considerably more bearish than bearish signals by themselves. This is a point to remember at all times. So please do not mistake all bullish signals as being only a bullish outcome.
And for our chart quiz next week, we'd like you to look at SBI and at Crompton Greaves and send in your analysis. Maybe pick one of the softwares that we've told you about this time and see how they work for you. So we'll wait for your replies to come in thick and fast. With that, we've come to the end of this episode. Next week when we come back, we'll tell you about the Fibonacci series. They're really a fascinating mathematical world, very easy to understand and very useful in technical analysis. That's what will come for you next week. Right now it's time to say goodbye, and as we go, we leave you with our tip of the week.